far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Hello everyone, welcome to Just Invest Today, and today we have a great video for you guys. Today we're going to be talking about the true definition of a margin of safety. I feel like everyone gets this wrong, including me. I've been taught by Phil Town, a really amazing investor, that the real margin of safety is actually in the price of the business, right? So we want to find out what is the true valuation of that business when we do a deep dive in a company, and then we want to cut that price in half. And that's where we get our margin of safety price in case anything goes wrong. We're not perfect on actually finding out the true value of a business. So that's why we get the margin of safety price after we get the intrinsic value of a company. When we listen to this Warren Buffett clip, we're going to actually realize that the true margin of safety is what the business is, how fundamentally sound the business is, what the business can produce, how strong the company is. And that's the true margin of safety that we're actually trying to find in these companies. So let's listen to Warren Buffett and see what he says about the true meaning of the margin of safety.
In investing in marketable securities, you can change your mind tomorrow and sell if you feel you've made a mistake. When you buy a business, we buy businesses to keep. And so our margin of safety is not in the price we pay. It's in crossing the threshold of being virtually certain that we're buying into a business that has durable competitive advantage, one with good economics, and we're buying in with people who have a passion for the business and who are going to run it the same way the year after they sold to us that they ran it the year before.
So the margin of safety is actually in how strong the business is and the competitive advantage. So think about one of these margin of safeties and one of these competitive advantages I'm going to talk about right now. Facebook. We all know Facebook. We understand Instagram and everything it does. But look what the strong and competitive advantage that Facebook and Instagram have. The network effect. So when we think about the network effect of Facebook, we realize how strong that competitive advantage is, because in order to post videos, photos, all that kind of content, you have to go to Facebook or Instagram. Where else are you going to go to share photos, share videos, all that type of content, and advertise as like a solo person? Where else can you do that? You have to go to Facebook, you have to go to Instagram to do all that type of stuff. So it builds a strong network of a lot of people, millions and millions of followers, friends, content creators. It just builds a whole network around that whole area. So you have to go there if you want to do any of that type of stuff. So it has such a strong network. And that's the type of margin of safety we want to find in these businesses. Places where you know for a fact that has a strong competitive advantage that is almost unbreakable. And that's what we see in these strong companies, these strong moats. When we think about companies with good economics, we always have to think about industries that are still growing and still have a long runway. When we think about it, like give you an example of like a tobacco company, like where can you see them going? They are going to be on the decline. Like more people are becoming health conscious. There's more advertising to stop smoking. So you understand that that kind of field, that area, it's not fundamentally sound to go into invest. That's not where you want to look. Or you can look in the industry like e-commerce, and we understand that e-commerce, the whole industry is booming. More people are going online. More people are actually staying inside because the whole situation, the whole pandemic. So more people are buying online. More people are getting access to the internet. Like people in China, people in Indonesia, like overseas. So we understand that the e-commerce industry still has a long runway to go. So those are the industries, those are the places where good economics with high growth rates and still compounding, continually growing and growing and growing. So that's the companies, those are the industries we want to look for. And then when you think about management and a good CEO, we have to think about people that actually have incentives to make this company strong. And we usually find that with people that are actually founder owned. Like think about Jeff Bezos, like Mark Zuckerberg. They have their money in the business. So you can see that they're fundamentally sound to actually make this business go longer, go strong, and go harder. When these founders of these businesses, it's their baby. They want it to grow, right? So we have to think about it in terms of what they're saying, what they're doing. Are these people visionaries? Are they creative? Like, we want these managers like that who have the vision and the understanding of how to grow a business. You can really see if they want to grow a business is just how they talk in their 10Ks. You can watch videos on them. Just kind of do your research on these managers. Like, what are they thinking about? Are they thinking long term? Do they actually like think competitively? Do they actually want to like think about, are they thinking about the bottom line, not just the short term? Like, those are the companies you want to invest in. So making sure management is sound is very important, because we have to understand that we're going to be investing in these companies for like 10 to 20 years. So management is very key.
So our margin of safety gets more into qualitative characteristics than the quantitative aspects that you're probably referring to in terms of the Ben Graham standard of buying a business for. He would say buy a stock. If you think a stock is worth $10, don't pay $9.90 for it, but pay $8 or something like that. When you're buying businesses, it's a different criteria. You're buying to keep, and you better make sure that you're buying both a business that you're going to like 10 or 20 years from now and a management that you're going to love 10 or 20 years from now.
So that's it for the video, guys. Can you please like, share this video, sub to my channel? I'm always going to be providing you with good content and more Warren Buffett news. So like the channel. That's it. Peace.